you're seeing the change, and you're seeing the profession acknowledge the change, invest in the change. Welcome to today's Land and Everything Else podcast. I am so excited to be talking with one of the firms that has supported our program since the hot second I got here. We're with Chip Kalousek and Doug Morton with Savant, who work in their portfolio management team. And so Chip and Doug, thank you so much for being with us today.
It's great to be here. Thanks, Greg.
Yeah, thanks for having us.
So I was wondering if y'all would introduce yourselves, just give us a little bit about who you are and what you do. I'd love to learn a little more.
Doug, do you want to go first?
Sure. Yeah, I am. I'm a financial planner, financial advisor at Savant Wealth Management. We have several offices. I work out of our Lincolnshire, Illinois office. I've been in the industry for about a little over 20 years. I'm a certified financial planner, and I spend most of my days talking with clients about their financial plans.
Great, Doug. That's awesome. Chip, what a little bit about you?
Well, Greg, I just want to first say thank you for having us on the podcast today. I have to admit, I wasn't a listener prior to you reaching out, but over the past couple of weeks, I've had the joy of listening to several episodes, and you've had some incredible guests. So guests and conversations, and just feel, really privileged to be able to join you today. I've been involved in wealth management in a variety of different investment roles since 2014. I'm a CFA charter holder, and generally I just describe myself as an investment nerd. Proud to call myself that. At Savant, my title is technically a senior investment strategist and client advisor. I know that's kind of a mouthful, but I serve as a senior member of our investment research team, and every day I get to work with the best, in my opinion, the best advisors and clients in the world, and help educate them and simplify really complex investing topics to help empower them to make more informed investment decisions. So really looking forward to our conversation.
Well, thank you, Chip. Thank you, Doug. And I appreciate you listening in. This has been a really fun journey, this podcast so far. We're primarily funded by a grant from the College of Agriculture, and it's kind of made it fun, right? Because we've been able to do this thing really without pitching anything in particular. And I think that's lent itself to fun and engaging conversations and not worrying quite as much about, who we're talking to, if they compete with so-and-so. And so it's been a fun journey. We're about halfway through it, and I can't think of two better guys to help us with that moment so far. So thanks, y'all. So the theme of today's Land and Everything Else podcast is process and conversations. And I want to open up with a process question for y'all. The more that I've learned about wealth management, and I'm kind of like Doug, right? I'm like in my 25th year of doing this stuff. I think I started in 99, which is, God, you say that out loud and it just makes you a little twitchy. But the more I do this, the more I appreciate the power of process. Right? The processes are what distinguish firms. Processes are what make things scalable. Processes are really how we do this job well. So I was wondering if you could share a little bit about your process at Savant, how you discover goals, and then how you use that process to build out a portfolio. And I'll throw that out to both of you.
Yeah, and I can start off on that. So thank you for that question. And I agree. I think process is very important, especially when you're a firm like Savant and you're growing and you have people across the country advising different clients, right? So you need to make sure that we're all doing the same thing because there's efficiency that comes out of that.
Yes.
And so we spent a lot of time on the front end when talking with clients and figuring out, are they going to be a good fit for Savant? There's several things that we go through with them. There's several different conversations, and at Savant Wealth Management, we take a holistic approach. We like to address and talk about all different topics within somebody's financial life. It's not just all about investments, taxes, estate planning, education funding, folks that own businesses, folks that inherit a large amount of money. There's a lot of different categories that we talk about with people. And so we like to spend a lot of time on the front end to really make sure we understand what are the goals and values of these folks that we're talking with. And, what we want to be able to do is to achieve ideal futures for our clients. And that's our goal. That's our mission. And we understand that we can't just do that only taking care of the investment side of things. We have to be able to take a holistic approach. So there's a lot of work on the front end. We like to say the financial plan dictates how the portfolio should be invested. We just can't talk with somebody in one meeting to determine what the best portfolio is to invest in, because it takes time to determine that. But again, at Savant, we want to make sure we have a consistent process, and we have a couple conversations, a couple different exercises that we walk through with folks to get a true understanding.
And so I'm going to pivot off that. And I think as I've been having the honor of doing this podcast, one of the things that I picked up on is values inherently accompany portfolio decisions, both in the alternative space and in the non-alternative space, right? My values often drive what I'm in because I'm happier. If I'm invested, I'm more aligned with those values. So how do y'all explore the goals, the values, the experience? How do y'all start exploring those dynamics and vectors?
Yeah, I mean, a lot of the times it comes down to how people think and feel about money, and how they grew up with money, how their parents handled money, and that a lot of times comes down to who these people are, what's in their DNA, and we have abilities to customize portfolios. We don't try to pigeonhole anybody or put them into a box where they don't belong. So we have a tool belt with several different tools, and we try to figure out what is going to be the best portfolio to fit, and align with people's values, because it's becoming more and more of an important part of the process.
Yeah, I couldn't agree more. And when we explore goals and values with clients, I mean, are there, do we have questions old school with the yellow pad to, what kind of fact finders? Like, I'm kind of curious y'all's mechanism by which you explore those. So just honing down on that a little more.
Sure. And I mean, we've been investing a lot of money in technology, and so you're right. It's not so much just the yellow pad of paper. And in this new world of having more virtual meetings, we're able to use tools online to show people, and really kind of get down to the bottom of what is most important to them. And oftentimes, if we're talking with a couple, let's say, for example, typically one of them is going to be more kind of what we refer to as the CFO spouse. And,
Sure.
By default, that means the other one is a non-CFO spouse. So we oftentimes, these tools that we have that we try to get to what's really important, we need to get both of them talking. We can't just talk to the primary driver of the relationship. And so that's been our experience, is that we can get both people talking, because it's their household, it's their net worth, it's their combined net worth, and it's really what's important to both of them.
All right. So we've explored their goals. We've got the CFO spouse if it's a family, the actual CFO if it's a small business, I would imagine. And we've kind of mapped out, this is what we want to do with our money. Here's what we believe in. Here's our experience, our history with money. At what point in the game do we start considering portfolio options, considering investments? And I'd kind of like to go through that process or journey on kind of sorting out, okay, are we going to, stick with mutual funds? Or are we going to look at something a little more dynamic? And I'm wondering, what do y'all go through to start making that differentiation decisions?
Yeah, so I'll talk through that. We have what we call the 4 steps of building an ideal future portfolio. And the first step in that process is an investment strategy review. And I'm going to use a medical analogy here. I don't know why we use a lot of medical analogies, or why I do. I think maybe we have a lot of clients that are doctors. My wife is a nurse practitioner. But to kind of parry on to Doug's comments, the analogy I like to think of is just like a doctor isn't going to make a prognosis or prescribe any sort of prescription to you without first visiting with you and doing a thorough workup. We view the investment process as the same way. And so in that investment strategy review, a lot of that is occurring kind of on the front end of what Doug was describing, of kind of getting to know your goals, your values. And as part of that process, we're going to be digging down a little bit deeper into the existing investment portfolio. I think it's also important to note that the investments are just one key part of, I would say, the 10 areas of financial planning. I'm not a certified financial planner, so I'm not about to list all 10 areas, but that includes taxes, that includes estate planning. There's all these other areas, and investments is just one of those 10, and they're all interconnected. And so before we really want to prescribe an investment strategy, we want to first be able to touch on all those other key areas and make sure that those investments are complementing those other 9 areas of the financial planning process. And I'm going to use another analogy here. I haven't, this is a new one for me, so we'll see how this goes. But I like to think of the investment strategy as the engine in your financial plan. So
Sure.
it's the engine that's going to help drive us and get us to our destination. And depending on kind of what we uncover in that financial review process is going to dictate what that engine that we build looks like. And so if you're an aggressive, have a longer time horizon and a higher risk tolerance, we might be building you more of a exotic sports engine that's maybe a little riskier. It's going to involve a lot more maintenance. It's more prone to breaking down. Certainly, we're not building F1 engines over here, but you get the idea that it's going to be a little more aggressive in nature, and that portfolio is going to probably have a strong emphasis on stocks. Conversely, if you're a little bit more conservative, your goals look a little bit more conservative, you want something that's more reliable and dependable, we're going to build you an engine that looks like a Toyota. It's still going to require some maintenance, but it's going to be reliable, it's going to be stable, and for certain clients, that is the most appropriate engine that we need to build for them. So in that 4-step process, step 1, investment strategy review, we're going to again review the existing portfolio. We're going to complete a risk assessment. And through that, we may identify some red flags, or what we would call catastrophic risks. Catastrophic risk we would identify as anything that could really derail your financial plan if the wind blew in the wrong way. So you can think of concentrated stocks. Sometimes we see people come to us with a lot of penny stocks. We see, various kind of things that we would want to identify, glaring red flags or holes in the portfolio that we have strategies to help mitigate and manage around in a tax efficient way. So through that investment strategy review, we're then going to confirm the investment strategy and move into an investment transition process where we're going to document those strategies that we'll be implementing in an investment policy statement. We're going to formulate a tax efficient plan on how we're going to get you from where you are today to where we want to be in the most tax efficient way possible. So we view taxes as really important factor in kind of managing an overall portfolio, and we're looking at after-tax returns. And then we'll design and implement the portfolio. From there, we go into an investment management process where we're going to continue to monitor and manage that portfolio to the investment policy mandate that we agreed upon. We're going to be systematically rebalancing where appropriate, and then also, again, proactively managing your tax liability. And then finally, the 4-step here is a portfolio review process where on some sort of regular periodic schedule, we're going to be reviewing your progress in your financial plan. How is that engine working? Is it getting us to our destination as we expect? We're going to reaffirm that the portfolio still continues to align with your plan. And then we also recognize, again, clients' circumstances can change. Life happens. You could come into maybe new wealth, or maybe illness strikes you, or something can happen and change your plan that what we set out 6 months ago, a year ago, 3 years ago, may need us to reevaluate and make some updates to your portfolio and investment policy statement. So again, those 4 steps are, we're going to do an investment review, kind of a data gathering. A lot of that encompasses a lot of the other comprehensive wealth planning that we would do on the front end. We'll do an investment transition analysis, kind of reviewing and documenting an investment policy statement, move into an investment management phase and a portfolio review phase where we're going to be implementing that plan we agreed upon and continually monitoring and reassessing its success.
Well, my heart loves a solid process, and I like that, right? And that's how we stay in line. That's how we stay fiduciaries. That's how we do the things we're trying to do, is having that process, those 4 steps, and being able to repeat those as we meet, periodically, as we meet initially. That's when we roll those things out. So I'd like to kind of pivot a little bit from that client process to the ones that y'all might use in your investment team. And the first great question, and I don't think there's a right answer to this one: how on earth do y'all stay updated in the world we live in? And when you're looking at securities, and you're looking at alts, and you're looking at real estate, and you're looking at this giant world of wealth management, I mean, how are you staying up to date? I'd love to get both your thoughts on How do you both stay up to date in this crazy world we live in?
Well, I'll start. And the world of investing can be incredibly complicated. There's tens of thousands of different securities and managers, and you know on top of that, there's different opinions and different product types and structures, and so that's why we believe, number one, and this is a little self-serving, but we believe it's important to have a financial partner by your side to help you kind of navigate this complex world of
Sure.
investing. And we
Yeah.
think it's incredibly important that that partner is held to a fiduciary standard, meaning that they're legally and ethically required to put their client's best interests first, that they avoid any conflicts of interest, and provide the best advice that is best for their client. And then number two, I think it's important that that investment partner also follows a disciplined investment philosophy that also aligns with your own personal investment philosophy. So at Savant, we follow an evidence-based investing approach, which relies on rigorous academic research and empirical evidence to make investment decisions. And I would summarize our investment process or philosophy, excuse me, with three key tenets. One, we believe markets are incredibly efficient. History has shown it's exceedingly difficult to outperform the broad market. And so this means stock picking and active manager selection is really, really hard. So instead of spending our time and resources and trying to pick the next stock or the best active manager, we believe we should let the markets work for us and try not to outguess the markets. Number two, focus on the controllables. Costs, we know, can be a huge detriment to returns, and it's one of the things that we can control. So we put a lot of emphasis on minimizing manager expenses, turnover, taxes, and any other hidden costs as much as possible in our investment selection process and our implementation process. And then number three, we believe diversification is your friend. So some say it's the only free lunch on Wall Street, where the sum of the parts is less than the whole. Our clients rely on us to build a resilient, dependable portfolio to help them achieve their ideal future with some degree of certainty. We wouldn't be able to do that without diversification. So all the portfolios we build are globally diversified across thousands of securities in stocks, bonds, and alternatives. So by following this evidence-based approach and sticking with our investment principles, it takes that really complicated world and makes it a lot more manageable. You'd be surprised, our screens that we run just on this really kind of basic criteria. It takes, it whittled down the universe of thousands of managers, sometimes to 100 or less. So just following these principles and an evidence-based approach allows us to really see through the noise and kind of stay focused on what we view as most important and not get distracted by chasing returns or the latest trends. So, Doug, do you have any other comments to add to that?
No, I agree with everything you said. I think the only thing I would just add is, when you're Savant is a large firm, right? We have over 500 employees. And I think the key to success in monitoring this complex world is you have teams of people. You have an investment committee. You have an investment research department. And so it's not all down just to one person. You have to have a team of people. And I think that is also helping how we keep track of it all. And just because we come up with a great portfolio solution today doesn't mean it's going to be the best portfolio a year from now. And so the investment committee, the investment research team work very close with each other. And if we see changes that we need to make, we'll make them.
Well, I like those answers. And again, just the process-driven approach, even in monitoring, even in keeping up to date. I mean, that makes things move well. That makes sure that we are doing our job we set out to do. I love it. But I have one more question for both of you. And there's no right or wrong answer to this one. And I'd love to get both of your thoughts. Doug, we'll start with you on this one. What are you excited about in the world of wealth management and financial planning today? What excites you?
What I get most excited about in the 20 plus years of me doing this, it's been no two clients are alike, right? Everybody's got their own unique situation, and there's different variables in everybody's lives, and trying to figure out what makes somebody truly different, and talking with not only just the end client, but with their family members, understanding how these people think and feel about money, because it gets back to, again, to the values. And I think what I get most excited about are the tools at our disposal and that are at our fingertips right now. We're able to help people in more ways than what we've had in the last 10, 20 years. And we can cover more ground. We can do it more efficiently. We can talk to more people across the country as opposed to just here in Chicagoland. And I think there's just a lot of ways that we can help people beyond just investment management. It's in the financial planning, it's kind of a catch-all phrase. It means a lot of things to a lot of people, but the way that we get integrated into people's lives. That's what I enjoy doing, and that's what gets me excited every day.
And I'm gonna jump in on what I'm excited about right now too, Doug, because you kind of teed it up for me. One of the things that over my career, I started kind of more back office planning before getting more in front of people. But I will say that when I look today at the tools that are out there, there's an awful lot less time spent with some of the quantitative, and a lot more time can be spent really diving into understand and know who we're talking to and how we can help them better. And I think that shift manifests itself very simply when we used to talk about helping someone plan for retirement, helping someone get to retirement. And now we talk about generational wealth transferring through generations. That's a much more complicated psychological, sociological, just so many elements there. We could not have those conversations with the tools of 20, 30 years ago. And now we can have more of them. So that's I'm going to take what Doug said, and that's what Craig's excited about to that end. But Chip, send us home. What are you excited about in wealth and in financial planning and CFA world today? What are you excited about?
Yeah, I have two answers for you, which I hope is okay.
Oh, please.
The first one might sound a little cheesy, but it's really how I feel. What gets me really excited today is, working with a great group of people that I admire and respect. And here at Savant, we're on a mission to improve 1 million lives. And the last guesstimate, when we include clients, the families that we serve, their 401k participants, Team Savant, and other people that we've directly impacted through our communities and charity efforts, is roughly about 100,000 people of lives that we've impacted today. That's our best guesstimate right now. I'll also mention we recently did a analysis on a trust for a cat, so that does happen. So if you factor pets into that analysis of how many lives we've impacted and assume, maybe 66% of households have some sort of pet, I would argue maybe it's a little bit higher than 100,000 lives that we've impacted. That's what gets me out of bed every day. I love the people that I work with, both clients and my team members. And so that's, in my own personal life, that's what excites me. But then the other thing that's really exciting, I think, just in wealth management in general, is this new up-and-coming young advisors that are just beginning their career or just a few years in. Craig, I know you've had the privilege to work directly with this generation firsthand in your position as professor. And, I've also had the privilege to work with, several of these young advisors and mentor some of them. And just their passion, their knowledge, their skill, their energy, I think it's incredibly exciting. And I can't wait to see what their thumbprint looks like on our industry in the next 10 to 15 years. I heard a statistic the other day, the average age of an advisor today is 55. So, I mean, there's just an incredible amount of opportunity for young advisors entering our industry. And then, I just look forward to seeing kind of the impact that they're going to have for all of us.
Well, I couldn't agree more, Chip, to that end. When we start looking at this next generation of advisors and we start seeing how we learn, how we communicate, what's important, what are the value sets, how do we want to work, where do we want to work? I will say in a nutshell, I don't want to date the podcast too much. So I don't know exactly when this will come out, but I will say that in 2024, there was 1 week in October where you had an event called Future Proof. You had an event, the Financial Planning Association, and you had the Bob Veras Conference. And you had these 3 big events with entirely different folks at them. Mm-hmm. And I think what excited me was you look at where some of the younger advisors are going, and it's places like Future Proof, that kind of like, this is for us. This is our way of communicating. We've got apps that swipe left and right on who we want to talk to at these events. You've got a beach. Everything is a 5 to 10 minute TED Talk instead of a traditional 30 to 40 minute keynote. I mean, everything is shorter, more concise, more bit, but the point, right? You've got somewhere between 5 and 10,000 young advisors, and they're like, yeah, this is me. This is how I want to learn. This is what I want to do. And the fact that we're starting to see our profession let go a little bit, right? We've kind of stopped this like, no, this is how it's always been. Like you go and you sit and you listen to Wade for an hour. Well, it turns out Wade does a really good 10 minutes too. Mm-hmm. So those are the things where it's like you're seeing the change, and you're seeing the profession acknowledge the change, invest in the change, and pour millions of dollars into that change too, and you still have your traditional places, but they were the heck of a lot smaller and older. So I am going to say that. So I do that. I'm with you, Chip, on that excitement, and Doug on our ability to dig deeper. I mean, those are huge takeaways today. I love that our listeners got those. And Chip, I think you had one more thing to say for us today too.
I do. So just a disclosure from Savant. So today's discussion is intended to provide general information. Please consult your financial professional for guidance on your unique situation before implementing any of the ideas presented. Savant Wealth is a registered investment advisor with the SEC. Visit www.savantwealth.com for more information about our firm.
Well, thank you, Chip and Doug. I loved our conversation today. I loved our takeaways. Thank you so much for making the time for me.
Thanks, Greg.
All right. Thanks so much.